Hello. So today's class we are going to do one of the question on BDA, that is December 2023, question number 24, and it is still on the trial balance on audit schedule. So we are going to go through the question. Then later we are going to understand the question. Then we are going to answer the question. Let me just try to increase the font so that you can be able to see. Okay, just give me a minute. Okay, sawa. So we can continue. So let's see what the examiner wants. Prepare an audit working schedule, having 5 sections for beginning trial balance, end year draft trial balance, adjusted. This is where we are reading here on what the auditor, not really the auditor, what the examiner wants us to do. So prepare the audit working schedule, having 5 sections for beginning trial balance, end draft trial balance, adjusted profit and loss item. Then we have statement of financial position item. Then we have each section should have debit and credit column. Okay. So regarding this, we are going to go through the question and understand exactly what he wants us, just to understand the question, because we already know what he wants us to do. So I'm just hoping that my font is okay with you guys and you can be able to see my screen. So question number 24, you have your new audit client, Safari Limited, began operation in 2021. Unfortunately, Safari Limited has not availed the audited financial position for 2021 due to a disagreement with the former auditor. After observing all the protocols, you proceed to audit the financial statement for 2022. This is where we are. The client uses a part-time accountant whose time is to update prime records, prepare a bank reconciliation, and some aspect of ledgers. After analyzing the records, you are able to extract the following. So here we have the cash at bank, we have the opening balances and what was paid and what was received during that period. Then we have end balance, the closing balance of each. Okay. Then we have cash in hand, the same thing. What opening balances, what was received, and what was paid during the year, and the closing balance. We have trade payable, the same. What was paid, and what was opening, and what was we had cash in hand, what went out, and what came in. So we also have these are the opening balances, January 2022 and December 20, and ending balances. So, and additional information number 1, the question says the owner introduced additional capital by cash, of which shillings 850 was agreed as share premium. Number 2, okay. Additional capital by cash of 850. Okay, this is the share premium. Additional number 2, land is to be revalued upwards by 10 million. So maybe just to explain on this, we have land revalued by and land revalued to or at. So when the examiner asked that land or there was a revaluation by increase is 10 million. So it means it was increased by 10 million. And when the examiner tells you that revaluation was upward at, it means the 10 million is the final figure in the balance sheet. And if the examiner tells you that revaluation upwards to 10 million, it implies that that the figure given on the additional information, that is the final figure in the financial statement position. I hope that is clear. When it is by, it means that is the amount they increased by. So you need to adjust. When they say to, and when they say at, it means that is the final figure in the balance sheet. Additional number 3, the following amount has been agreed for depreciation. So this is the amount, okay? Building, motor vehicle, furniture, and equipment. The following adjustments are necessary: accrued administration expenses. And we said accrued, it means it is the expenses for that year. And when it is an expenses for that year, we need to do an adjustment. And when this, okay, it means it is an expenses that we have not yet paid. And for prepayment, it means it is an expenses that it is more of we have prepaid some expenses for the following year and not necessarily for this year. And when we are doing adjustment in our financial position, in our income statement, the expenses, we will only take the expenses for that period, and we will not consider the prepayment. The prepayment we will adjust as a prepayment on the balance statement of financial position. But when it comes to capturing the expenses for what was paid, we will only, on the prepayment, we will only focus on what was paid for that year. What was not paid for that year, it is none of our business when it comes to a statement of income statement. Okay, so this is what we are going to do. I hope we can be able to finish in good time. So we are going to have our details here. And by the way, I will always advise students, when given such a question, the first thing that you need to do is come up with these columns, because they might take time. So if you come up with the columns, will literally help you to save on time. Your work will just be inserting what you need to insert in those columns. Okay. So we will do this, and we will have this one. I know it takes a time. I think the question is so easy, but now the problem or the issue of this question, it takes time for you to come up with these things. And now after that, you start, what is this? Is it to copy? No, I meant to copy only the values so that it will not be giving me zeros when I copy the entire. Okay, let's try again. Copy. Okay, nice one. Okay, so okay, Control V, Control. They said we do how many columns? They said 5. That's what they said, 10, or they said okay, whatever. So long as what I did or what I will encourage student, the column they are asking, okay, we will go and find out before I explain that. 1, 2, 3, 5. Let's work with these columns. Yeah. So this is our workbook. Escape. So this is what we are going to use. Okay. Okay. I will need them in that manner. Okay. And by the way, if you have difficult in using or maneuvering with your Excel, just inbox me. I will send you some of the helpful classes that will literally, I'm 100% will literally help you to be able to know how to go about the Excel operations and just to understand Excel, because it is not a priority for this course, but someone needs to have a basic knowledge of what they are doing. Yeah, it saves time, by the way, if you literally know what you ought to do. I know that's a lot. I'm just trying to make my work at least presentable and appealing to the eye, and mark you that this is not examinable, or you will not be given marks for having colored Excel sheet. But now, for the sake of our class, I just wonders when we go back to it to doing the revision, it's just appealing and it encourages someone literally to do the revision, because at a time where life can become challenging and you need something literally to encourage you. Okay. I'm approaching this question in a very very basic way so that you can be able to understand. Okay. We'll go and read the question, what they were asking, how many columns. So they say required is prepare 5 sections. Okay, it is 5 sections. Those are 10 columns. Okay. And I think we have them all. So what we will have to do, step number 1 on the particulars, this is what we are going to do. You see, we are going to carry all the opening balances for this analysis that we are given. Then later we will have adjustment on that. And here on the whatever the question here on what we are being given, audit working schedule, having beginning with the trial balance and end year draft. So we'll come here. It is just good to note here what you are doing exactly. And I will say an adjusted trial balance, or I will say, as the examiner has said, my original trial balance. But I will prefer to use this term. Then I will say adjustments. Then after adjustment, I will say adjusted trial balance. Okay, then after here, I will say they also want profit and loss item. Okay, then we will do financials as it is called. Let me just use so we will say statement of financial position items or balance sheet items. Okay, so this is what we are going to do. So here, opening balances, I will just go here, my good friends, and I will copy and paste. Just like literally here, what should I do so that, okay, just a minute. I think that's not the best way. But what I'm trying to do is I'm trying my level best. I will copy like this to save time in my exam. You get? I'm doing all that I can so that I can be able at least to save time. So I'll just come and also copy this one, copy and paste it here. Okay. Or the other way, escape. The other way I can say is equal to, I hope it will pick this one. Okay, nice one. We can use that one. It's equal to, then you pick this one. Okay. Then you enter the same thing. This one, then you enter, then this one. Okay, let's see. Opening balances. I think we are good to go. We will, because also this information do have opening balances, is what we will end to. Okay, we will just have to delete this. Good. So I think we have captured all the opening balances to here. So let's see on how we can be able to adjust. I think even this one do not have figures. Okay. So this is what now, with this information, this is what now we are going to do. We are only going to first, what we are going to do, we are going to capture the opening balances. This is the unadjusted trial balance for us. Then adjustment will bring in the adjustments for the during the year. And for cash at bank, of course, cash at bank, we will debit. And here, that is a current asset. Cash at bank, we will go with the opening balances for cash at bank. And here we go. Okay. For cash at hand, it is also a current asset. We will debit because it is a current asset. Then we have receivables, current asset. We will still debit. There's receivables. Okay. Then we have we have payable. That is a current liability. We credit. I just hope I am clear. Yeah. So we debit. Okay. Want us to do it so far. Land and revaluation, of course, it is fixed asset. We will debit. Then we have we will have building at cost. We will do the same. It is a current liability. Oh, sorry guys, fixed asset. Yeah, so accumulated, it is a credit. We have depreciation and we have accumulated. Accumulated, it reduces our cost of it reduces the cost of the building, so we will have to deduct by doing the opposite of what we did for the building cost. Then we have furniture and equipment. So that one will be able to debit. Then accumulated depreciation, for it we will have to credit. Okay, we come here and accumulated depreciation, for this we credit. Inventory, that is a current asset, so inventory we will have to debit. I hope we're in the same page. Then we have share capital. We will have to credit equity items. We will have to credit them. Where's the amount? It is 3,000. I hope so. Then 10% loan. We will do the same. We have I captured the premium? I had the Okay, it is 10,000, then the premium is what is 3,000, 100,000. Sorry, I picked the wrong figure here. So we'll come here and say this one, this one, it is 10,000. Then here, okay, then 10,000, then, okay, escape. Let's just hurry it. Okay, back, then we, okay. That is it. So we are done with all the opening balances item. Yes, so we will go back to the adjustment item and see how we can be able to adjust this unless otherwise. But before we do that, let's just do our auto sum to see whether our trial balance is literally reconciling or there's an issue. So I will ask. Okay, so we will run this up. Okay, and we will do the same here. And we will also copy this so that going forward, it will just pick the formula. If you do this by the end of the exam, your work becomes so good and so easy. Okay, so it implies that, okay, we can see here that our debit side is more than our credit side. So there is an implication of we need to, because we were not given retained earning for the year, so we need to take the difference of what we have to the retained earnings for the year. Retained earnings. So that our books can be able to balance. And this is what we will do. Most of the time, okay, before we do this, let me make you understand that when we want to get the total current asset, we do take the current liability, the current asset plus the fixed asset. And for us, for our balance sheet to reconcile, the total the total asset ought to be equal to the amount down there. So it's happening that our amount down there, it is not of the liability and equity need to be the same as the amount for total fixed asset. But it is happening that it is not reconciling. What we need to do, it means there is some item that will help us in as a balancing figure, that is a retained earnings. That is why I'm taking this minus this one to get what is the difference. And that is 115,840. And this is what I will do. 115,840. Okay. My books will be able to balance. So we can move on the adjustments, on the, what do we call them? The adjustments. Let's go and adjust our books. So we'll start with up here. We will start with the cash at bank. And this is what we will come and do. We will go and find out the things that were paid for that period and the money that was received in that period. So here we'll come and say is equal to, we will go and say how much did we receive for the year, okay, plus this one. Okay, why is it not okay? Why is Excel behaving weirdly? So okay, then what did we pay for that period? Okay, so we'll say we paid for this amount, we paid for this, we paid for this, we paid for other expenses, internal loan, we paid. Okay. So these are the things we paid using the money in the bank during the year. So we will go to cash at hand. We will also go and find out how much did we receive during the year so that you can be able to adjust. So we received this amount plus from trade receivable and from capital. And how much did we pay out using cash at hand? this is what we will come and do. Cash at hand, we will do this one plus this one plus cash at bank. Will yes, this one. Okay, and we will find out that 168,770 is what we pay during the year. Then we will come and do the trade receivables of how much we received and how much we went out. So for this one, it will be this one. Okay. So yes, then we have here 2B is equal to trade receivables. Anything for trade receivables? Yes, we have these two. So that's good. We will have more adjustment, I think, on that. But for now, we can work with that figure. So where are we? Trade receivables. Trade receivables. Okay, on trade receivables, this is what we will do is equal to. Let's go and see. Okay. We only have 100. Okay, we are on trade payable. This one plus this one. Okay. Then in this other side is equal to. I just hope that guys we are following and we are seeing what I'm doing. Yeah, we have purchases, things we bought for that period. Okay. So that is it. Then we have here, we have what do we call it? Oh, no. We will come here because we are doing an adjustment of this opening balances. So we are being told ending balances for this one we are not given, but we are given the adjustment. It was revalued by, so it means we need to adjust with 10,000. I hope that is literally clear with us, that you will not get confused in the exam. Okay, so that is 10,000. Then on the, what else are we supposed to adjust on? We have, or I don't know whether we have something to do with depreciations, so that we can also do, yes, we do have depreciations, and these are not number 3. So what I will do, I will just copy this, copy. Okay, come here. I will do my best to make sure that I am literally saving on time. So we'll just add here depreciation on building, depreciation on motor vehicle. We have depreciation on, okay. Maybe we will just come here and say no color, don't that no fill, okay. So we will find out that we do not have the cost for motor, the accumulated depreciation for motor vehicle. So we will, oh dear, what did I just do? Yes. So here we will go in with our figures. Okay, and here we go. For depreciation, remember it is an expense. So I will still do the same. I will just copy. I will also go here. Not really copy. Let's do this, guys, to make our work, not to have a lot of work over no fields. We'll come here. For the depreciation, now that we know it is an expenses and we have to debit, we'll come here and say is equal to, okay. Then we auto sum. Okay, then on here, accumulated for motor vehicle, we will just credit this. Then we had here accumulated depreciation for the building, and we have the depreciation for the building. Just go do like that. is equal to for the escape. Then we say here accumulated for furnitures. This is what we have. And remember that we are monitoring our books are not balancing. So where is our program? Okay, there is something we have not adjusted well. What might that be? Oh, I get it. We for this one, 10, 5. I think ought to be up here. So on land at revaluation, what you need to come here and say revaluation. I will call it revaluation reserves. We debited this, we will come in to the credit of this. Okay. We're still not there. Oh, what did we know? Oh, I see. We had but our books ought to, okay, maybe it will balance with time. Let's just continue with the adjustment. Then we will see what are those things that we have not captured. Then we will. So we can do all the adjustment. Then at the end of the day, we will come and see whether our books balances or still struggles to balance. I hope that is okay with us. Just a minute, guys. Okay, so now we can proceed. Okay, maybe what we can do, we can literally adjust everything. Then we can see on what to do. So here we will come here and do the adjustment here. Introduction. Number 1, they're saying we had a share premium of 850. So this is what we'll come and do. Share premium, we have an adjustment of 850. Share premium, where's share premium? We have our share premium here. We have an additional information of 850. Okay, that's done. So here also, I think for this one we did number 2, we did number 3, we have done. Okay, I hope that is clear with each and every one of us. We have done, I think we got what we did with number, what do you call it? Step. Not really that even expect. So we will have come here and do the adjustment for this. Okay, let's do this. Is equal to. I'm just trying my best to make my work easier. I will do the same. Okay. Okay. From here, okay. Also just come here. What I will do, I'll just come. Okay, 10%. I'll also carry that one. And I will come here. And what I will do, just to also make my work easier, I will do this Control V. Oh God, it has refused. Okay, let's do it manually. So it's equal to accruals. Remember, accruals are our current liability. So we will have to credit. Prepayment is an asset. We'll have to debit. Debit with the same amount. Okay. Then we have Income tax expenses, that is, this is an expense for us. Credit loss is this side. So remember, credit loss, it will also affect our trade receivable. I hope that is clear. It will affect our trade receivable, so we need to do some adjustments on our trade receivable with the same amount of 17. Is it 17? 1,700. Yes. Oh, credit I'm sorry, guys. This is an expense. So we'll have to affect our trade receivables with the same amount plus 1,700. Okay. For expected, what do you call it? It is called expected credit loss on balance. So they are saying on balance, so it means it will also affect our trade receivables, but now at balance at the end of the period. On the adjustment column, that is what will be affecting our. So it is this expected. So we will now come and we have whatever was expected and whatever was. Just want to find out something. The provision we have now, it was expected credit loss. Now we will have provision. We will provide for it provision for credit loss. So remember, provision is a current liability item. So for this one has a bit of calculation, and you will come here and see what I had calculated, or what I'll be able to calculate. Okay, let's calculate it. Is equal to, and we will come here and say it's equal to this amount plus this amount, okay, plus, what do we call it? We had something to do with receivables. Oh, guys, I need to escape. I need to focus on the receivables. Let's focus on the receivables so that we get that amount, and we'll come here and we will say what was the opening balances for this trade receivables, and here it is the opening balance trade receivable here. Okay, then we do adjustment. We do the addition of this one, okay, plus, is it really pluses minus into brackets? Then we come and say to brackets, this one, what was paid, plus this one, plus 17. It is the same thing, we are getting 19. So we'll come here and say 10%. I hope it will pick. Okay, so we get 1,900. Then we come here, and we say that for the expected, of course, expected will have, what do you call it, a debit entry. We just come here and pick the figure, and also this other side, we will do the same. Can just do like this. Okay, that's done. Then we will come here and continue with our own calculations. We are done with. So what we will do, you see, most of my entries here only had one entry. So I'll come here and say admin expenses. And I will say operating expenses, so that you have a double entry, provision for, should I call it provision for, on the tax item, because we are given the tax for, let me talk about tax payable, because so that it is payable. Okay, I hope that is a good term for us to use. Payable, what am I even doing? Okay, then we, yes, we can do, then we have a credit loss. Also on the credit loss, we also need to provide, I think so, prepaid. You need to provide for that one. I think the credit loss we had already adjusted on the trial, on the not trial balance, on the receivables, so will not affect it again. So what you will come here and do, for accrual for administration, we just come. Oh dear, guys, I meant this ought to be 100 ought to be other this side, not this side. Then yes, then this good, this good. So what I will do, I'll just do the opposite of what I have done here. Equal to, then let me prefer to add, because I know I have other adjustments that are coming up that we had during the year. Administration, I will also go and no, for provision, I said we will not have provision for create. Oh, this one already adjusted. Oh, yeah, so we are here. On here, this is what we will do. I would prefer to write it in because I have a reason for that, rather than to link, because it will auto link the other side and also do adjustment, and I don't want that to happen. So, and here we have expenses. We have expenses of what do you call, where or expenses? Sorry, guys, 15,600. I'm getting tired. Okay, tax payable. For tax payable, we have, is it 1,700? Oh dear. It's, if you don't link these things, I'm just feeling confused. Okay, so here, prepayments was good. Okay, we will bring prepayments back. And 650 is what is, this is what is confusing me. 650 is the accrued for Nini, for that one. Then 100, it is now for prepayment. Then this one, it is 15,600 for payable for, oh God, am I missing out on some? Yes, I'm good. Then 1,700. Yeah, if the time it is just confusing. But you need to be a bit careful. So I think on our additional information here, we are done with everything. So we'll come up here and do the adjustment for other items that we have not yet adjusted. And some of the items, we will not repeat them. Like, let's carry this and copy, operate. That one we have, this one, and this one. Let's carry this, copy. Okay. Then we come here and say Control V, and I will just say no fill. Okay. And on these ones, depreciation, expenses, I will go back here. It is an expense, of course. I'll go here and say, for depreciation, how much did we hit here? Remember that on admin expenses, we already have something. Yeah. So what we will just come here, we will say is equal to plus whatever is here. Okay. Then I'm sure we had other operating expenses, which we had it here. Why did we credit an expense? No, oh yeah, sure, okay, it's okay. Yeah, because prepayment is the current current asset item. So on prepayments, where are we on the other operating, what we will do? Then we have these other items that we had here. For our adjustments, we had loan. Where is it? The question is easy, but with all this, literally the question consumes a lot of time, yet it is not a complicated question as we might think. So we have dividends and motor vehicle. Let me see whether dividend is, it is here. Then we have this one. I'm sure that is good for us. So we are done with that. So we will come here and do what? And bring in the cells. Or do we have any other? Okay, let's continue. We will do per item. So I'm pretty sure we have adjusted everything on cash here. Then on this part, we will also come and do an adjustment for the items, on the two items, that is admin and operating expenses. So on admin expenses, we'll come still here. On the admin expenses, we'll come here, plus let me escape one. Okay, plus admin on here. Okay, plus then we have operating expenses. Let's go where the operating expenses is. Okay, plus operating expenses, plus we have this one. Okay, after that we have trade receivable. We have sales. We have to adjust for sales. No, let me just pick it the way it is. It's equal to, let's go back and pick the cells here. Okay, and for cells, of course it is, we'll give it a credit. Of course sales has a credit entry. Yeah, we have adjusted everything there. Then we will come here. Is it on the payables? We are done with. I think the only thing we had not adjusted is here. And also for this one, the thing not adjusted is the purchases. Control V. For purchases, we will debit. Okay. Anything that we are forgetting that we have not adjusted, guys? Okay, just a few amount that ought to help us to balance. We just need to go through it and find what is that. Okay. Let's go through it and find out. Oh, sorry for that. I just stopped weirdly that. Yeah, sorry for that. Okay, so one thing is missing. I think we did not capture. You see here, we do have opening. We have inventory. We have opening inventory, and we have closing. So we need to come up and say, we can call it either closing stock closing stock or inventory and write the date, but I will go with closing stock. Sorry for that. And say closing stock is 59. What do you call it? It is, we got that it is 59. Okay, so we will have escape. Let me explain something. We have closing stock affecting the income statement. Then we have here closing stock. Oh, sorry. Closing stock for statement of financial position, so that our books can be able to reconcile. So we have 59,900. So on 59,900, this is what we will debit this one. Where are we? Oh dear. 59 with the same amount. 59 is 59. Okay, this one. And credit the same. Are we really doing adjustment? Oh yeah, here. Okay. Yeah, sure. Now our books are balancing. So on the items, on the adjusted TB, this is what we will do. We will come here and you'll say it's equal to, what do you call it? It's equal to. So we are on the debit side. We will say this one plus our debit on adjustments minus credit on adjustments. Then we say enter. Then we'll also come here and say it's equal to, no. So from here to here, it is all debit. So it has a debit entry. Then on this side, we'll come and say, because this payable is a credit, we'll say here is equal to this one minus this one plus this one. We'll say enter. Imagine that's very easy the way it is. Just do what you have already done, because it is just adjustments here. So, and here we will copy the formula, because this, it is Control V. Okay. Here it is also okay. Then here we will copy this formula, because it is accumulated depreciation, which is a credit. Oh dear. Sorry for that. Oh, furniture, sorry. By the way, you need to be so careful. You copy this, you paste here, or let's work with one side, then we'll come work with the other side. Let's adjust everything on the debit side that has a debit entry. Then we'll come here, we will see Control V. Okay, Control V. Then we will come here and we will just do this. Okay. Oh dear, this is sorry. It's confusing you guys. Yeah, so this is good. Then we'll come here, copy. Then we have Control V, accumulate, Control V, Control V, Control V. Okay. We will copy the formula, then we just drag this one. You need to be very careful. Control V. You need to be a bit careful, guys. Control copy, Control V. Okay. Okay. Control C, Control V, Control copy, Control V. Be a bit careful, please. Always be careful, especially when you're doing this auto. Okay. copy, Control V. I literally want to finish this question before the end of the class, so that from next time we do another question. Okay. Okay. Done. Okay. So on here, this is very simple. I know each and every one of us, I think we do not need this part. I know each and every one of us, we know what are the, what do you call it? Let's hide this so that we can have hide. We will have a balance sheet item and income statement. So for this one, these are these items. Here, what we will just be picking is what will go to balance sheet and what will come to the income statement. So what I'm using is the adjusted TB. Please note that. Land, of course, it will come here. Okay. Accumulated depreciation this side. This one, this side. Okay, this side. There is a bit of a, maybe I can, when we get time, I can teach you of a formula, but it is a bit a confusing formula that I will not encourage us to use it in the exam because it can mess you up, but it is just good for the purpose of learning. It can be a bit helpful. When we get time, we can use that auto formula so that we will not be dragging these figures manually like this. Okay, so this one is an expense out here. Okay. Accumulated, it is this side. Oh dear, what am I? Oh yeah, sure. Accumulated is this side. It ought to be this side. Okay. Then we have prepayment this side. Income tax, it is an item. Then this also it is. Okay. Sorry. Provision will go this side. Admin expenses this side of balance, whatever, income statement. Okay, then this tax payable, it will go this side. Distribution is an expense, income statement. This will come here. Then MV will be here. Sales will be here. Then we have purchases. Purchases will be here. Income statement. Closing stock on income statement will be here. Sorry. This will be here. Then closing will be this other side. That's how you get your marks. We are done with the question. So thank you so much for being attentive and have a good read and study as you prepare for your exams.